I think it's safe to say that we hate when trades go the opposite way and end up being a fake out. Fake outs suck, but what if I told you that there's actually a way you can enter on fake outs and profit? Not only will this help you grow your account, it is really satisfying to enter on a fake out and get in from the origin of the move, right? Now, the best thing is that you will start avoiding fake outs. So not only is that going to help your consistency, at the same thing, you'll be able to add an extra entry setup. Now, for the guys who've been watching the channel for a while, you guys have watched setup 1, 2, 3. This is setup number 4, and I'm going to show it to you guys today. And yeah, this setup has a 75% plus win rate here, tested over time, tested on live stream. So if that sounds interesting, stick to the end of the video, leave a like, leave a subscribe if you're new and you enjoy the content. I read all your comments, so I appreciate that. All of that YouTube business, it's what I call it, out of the way. And I'll catch you on the charts here, and let's break down how to enter on fake outs. Let's go. All right, guys, so let's get into this. How is setup 4 going to work? How does it look? And we're going to go into detail here, and I'm going to show you guys how setup 4 is going to look and teach you all of that good stuff. So I'm sure you all know what a fake out is. Fake outs are pretty, stuff like this, fakes out back in the range. Maybe here you try to take a buy above here. This is a classic fake out here. You take a buy, when it breaks the high, boom, just to fake out, go the other way. Now you take a sell, it fakes out again. So how to stop avoiding this and how to profit off these type of moves here, because there's a specific way we can take these certain setups. So how's the basis of the setup? Before we get into the nitty gritty type of stuff, let's look at how the basics of the setup is going to work. So how the setup is going to work is what we need, and I'm going to draw it out for you nice and clear, is we need some sort of range to be formed. So let's say we're moving bullish here. So here's our bullish candles. What's going to create a range is when we start to close some bearish candles here, right? That range as well is going to form what? Now we created a resistance, and now we formed a support like this. All right, so now we're forming a support. Okay, so now we look something like this. So what does this make? So let's say we are moving today bullish, right? And I'm going to make this simple. We are moving today again bullish. So we expect price to go up today. Now, when we form this support and resistance, right, here's your support and here's your resistance. Okay, we will either look in terms of price action. This is going to be our range. So as long as we have towards the left hand side here clean candles, which means no resistance and no support on the left hand side, it's just clean candles, that's where our buys can come above here. But let's say we see this big candle come into the market. Now we have a break of structure, right? We're breaking. How do we know we're break of structure? And remember, guys, break of structure means price closes below, not just wicks, closes. So now this 15, let's say we're sitting on a 15-minute time frame, because that's the time frame you're mostly going to be using for this entry, is the 15-minute. So let's say we're sitting here, 15-minute candle close below the range. You're saying break of structure. This should be a market structure shift. I expect the next candle to do what? To dump here and continue my sells. Okay, whereas that is wrong, because we are not looking for sells right yet. We need to be patient for sells, because nothing tells us to sell. Just because one candle is closing below a range, remember our original idea was price to continue bullish, doesn't mean shit basically. So what ends up happening? This is where people get caught in the fake out, and we see the next candle close back inside the range. Now when this candle closes back inside the range, that is your fake out candle. This candle that dumped down there, remember a minute ago I was talking about clean candles and how we want to trade in areas where there's clean candles. This one bearish candle, can be 2, can be 3, doesn't matter how big it is, has created that clean candle, and this becomes what? Our trading range here, right? This becomes our trading range. This becomes an area where we can look to profit off. So when we see the next 15-minute candle fail, okay, we see it fail to continue down and close back inside of our original range, remember the support. So when we close back inside the support, that is going to be your fake out trade to give you that bullish move, and that's exactly how your trade is going to look, right? So for those who've been following along the channel, it is almost like a setup to trade, but with a fake out here. And we're going to see stops being held what? Below the previous candle here. TP going to be the top of the range, TP1, and then TP2 going to be, of course, your next target, wherever your next target is based on your support and resistance markup. So highly recommend, if you're new to the channel, to check out more videos so you can catch up on some of this stuff, but I will cover quite a lot here, so you can stick around for this video first. So that is the basis of the setup. So you can take a screenshot of that, and that's the fake out. It will work the same to the downside as well. If we're going in a bearish market, this will just be the opposite way around, right? We will see price try to close above the range and fake out back inside the range, okay? So I'm going to remove these drawings here, and I'm going to show you something on the chart of what we need to do in order to identify fakeouts, okay? So the first step is here, you need to be able to do your top-down analysis. What is the top-down analysis? Start from the daily, weekly, tell your story. We need to understand the number one thing for avoiding fakeouts is knowing your daily bias. I encourage everyone watching this video, if you don't know about daily bias, please watch it. It also it comes with a free indicator that you guys can use for free to teach you what bias is. So let's go and do our top-down analysis here and see how it works, right? So when we're taking trades, we want to have a certain direction. So what's the easiest way to know what direction is if we have previous daily candle closing bullish, okay? If the previous daily candle closed bullish, and the previous 4-hour candle before your session. If you're trading New York session, that will be the London 4-hour candle. If you're trading a London session, that will be the Asian 4-hour candle. If that previous candle is closing bullish and the previous daily is closing bullish, we have a bullish session. It means we should only be looking for buys. So when we get a fake out and we see price breaking structure towards the downside, that's not a sell signal. That is a signal saying, hey, if this closes back inside that range, I'm taking a buy and trading that fake out setup, and I'm not getting caught in the same mistake that many people make trying to trade a break of structure. Same goes if we have bearish candles on 4-hour towards the downside, previous daily on 4-hour closing bearish and previous 4-hour closing bearish, that is also going to be only for sells, right? So if we go and look on a day like today, I don't know, this is a random day, we have previous daily closing bullish here, right? And we have previous 4-hour closing bearish here. So we're a mixed session. What do we do in mixed session? We don't really take setup number 4 unless we have 4 hours telling us that downside makes sense. So if we have like 3 or 4, the only other time, right? The only other time that you can take is if you have a setup 4 on the 4-hour time frame, right? So if we're seeing a fake out happen on the higher time frame, meaning let's say we had a candle close above here and close back in the range, then we can say, hey, there's a fake out happening on the higher time frame. We are seeing multiple 4-hour candles close bearish. We're telling the story. It makes sense for price to continue down today. I'm personally only going to look for downside. Then that means upside fake outs will also make sense here, right? So let's go and see if we can go find a bullish bias day and see where we would look for fake outs, right? And then I'm going to show you an example, okay? So let's go to here, random day here. See what ends up happening on this day here. Start off on the daily time frame. We can see previous daily closing bearish here, right? And previous 4-hour candle here closing, I would say technically bullish. Let's rewind so we have a bearish session, right? That would be your bearish session like this. So this means in that session you would be looking only for sells here, right? So if we go down to the 15-minute, which would be your entry time frame, remember this is your entry time frame, you'd be looking for a range to form. So we'd be looking for a range, and remember we're only looking for sells. So we would fast forward and we would say, okay, here today there's no setup 4, but let's say price was to fake out above this resistance, okay, and we were to see price try to break above the resistance, okay, like this, you would be looking for buys now. Oh, I'm taking buys. We see it close back inside, that's your sells, because today you have bearish bias, you're looking for sells. That's where the fake out. So the fake out is coming above or below a support or resistance following bias. So I recommend you watch the bias video, and in the beginning of the video I showed you how exactly. So to make this all clear for all of you guys, I need to show you an example. I'm going to use Pip Labs here. Pip Labs is our backtesting and simulator software that we made, and it's great for showing examples real time, just so you guys can understand the setup. So before we get into that, the other thing I want to talk about is that you need to be trading in times of volume, right? So times of volume is very important because that's where you want to be taking the majority of your trades, in times of volume. London Open, New York session, London session, whatever session you trade, that's the only rule, trade in times of volume. I'm going to be using our simulator to give you an example here of how a trade can play out, a setup 4. This is great backtesting software and simulator, and also allows me to show you guys real life examples. So we know the rules. We need to check daily time frame. What is session bias today? Well, session bias, previous daily close bearish and previous 4-hour candle close what? Bearish. So that means session bias is bearish, means we're only looking for sells today. Very important. So I don't care everyone trying to take buys right now. The next thing is we need a range. So we had our range formed, right? So I've skipped till I found a setup 4. Here's your support formed and here's your resistance formed. And here's Mr. Fake Out. Here's your fake out. Here's your fake out. Now I need to see what happens next. I have not skipped to what happens next, but this should play out. If it doesn't, then I guess show losing trade. This is your resistance. Price closed above the resistance, broke the high. You would have been triggered in. Everyone's looking for buys here, right? Now they're looking for pullbacks to look for more potential buys, okay? But we know we're bearish bias. This is a fake out back in the range. With these clean candles here, this candle should be able to fill the range. So instead of taking buys, we stick true to bias. We take a sell here. Stop loss goes above the range. TP we target into these wick zone here, right? And we press confirm. And now we need next candle to open, make a top wick, right? And flip and break the lows and trigger us in, right? So that would have been us triggered when it broke the lows. I'm gonna skip this by 30 seconds here. So now we're holding drawdown. But we have to understand that price has to respect. If it goes in straight and hits stop, that's fine, that's probabilities. But this is showing you real life. Like this would be scary. Like, oh, this is where all of the traders who are trading, right, high or low, they're entering on this. They're like, oh, I'm entering on this. Well, we're sticking true to bias. So now we're back in profits, which is always good. And we have to just let it do its thing. So let's skip a little bit faster to save time here. Back in drawdown now. As long as it respects these highs, this should be able to continue down, continue the fake out and follow bias. And there, yeah, now as we get towards these lows, should be able to give a final push here. Yeah, okay, that took us out. Boom, that was the trade. Hit TP there, as you can see. Closed for 1.5% there, 1 to 1.5. Pretty simple trade. And that's how the fake outs look like. So that's an example of showing you how it works. Fake out. Look at this. Now everyone who took buys like, damn, I got faked out. I got faked out in my buys. Look what ends up happening, right? I'm in trouble here, right? We can see what ended up happening. So that's exactly it, right? That's how the setup works. That's an example of setup. So I hope that this video has been useful. I hope you don't get caught in much fake outs anymore and have a better understanding. Let me know in the comments if you enjoyed that video. With that being said, take care, trade sharp, and hopefully catch you guys very, very soon. Peace.